Welcome back to Yield Curve Trader, where we break down the biggest market moves in plain English so you don't need a finance degree to stay ahead. So Wall Street thought they had Google figured out. Analysts ran their models, crunched their numbers, and predicted Google would earn about $2.62 per share this quarter. Google came back with $5.11. That's not a small beat. That's nearly double what the smartest people on Wall Street expected. And today, we're going to break down exactly what happened, why it matters, and what it tells us about where Google is heading. Let's start with the headline numbers, and I'll keep it simple. In the first 3 months of 2026, Alphabet, that's Google's parent company, brought in almost $110 billion in revenue. That's up 22% compared to the same time last year. Now, 22% growth for a company this size is genuinely impressive. We're not talking about a scrappy startup here. This is one of the biggest companies on the planet, and it's still growing like it's got something to prove. Net income hit $62.6 billion, up 81% year over year, and this marks their 11th quarter in a row of double-digit revenue growth. 11 quarters, nearly 3 years straight of beating expectations. Now here's where it gets really interesting. Google Cloud, which is basically Google selling computing power and AI tools to businesses, grew 63% and crossed $20 billion in revenue for the very first time. To put that in perspective, just 2 years ago, cloud was only about 12% of Google's total business. Today, it's 18%. And at this pace, it'll be a fifth of the entire company within a couple of quarters. What's driving it? AI. Companies everywhere are rushing to build AI products, and they need Google's infrastructure to do it. In fact, the backlog, meaning contracts that are signed but not yet paid, nearly doubled in just 1 quarter to $462 billion. That's future revenue already locked in. Here's the crazy part, though. Google's CEO, Sundar Pichai, actually said on the call that cloud revenue would have been even higher, but they simply can't build data centers fast enough to meet demand. They are literally leaving money on the table because they're running out of computing capacity. That's a good problem to have. Now, I know what some of you might be thinking. With all this AI stuff, isn't Google search dying? Isn't everyone just using ChatGPT now? The data says the opposite. Search revenue grew 19% this quarter, and Pichai said that search queries are actually at an all-time high. People are using Google Search more than ever, partly because of new AI features like AI overviews that make the results better. So no, search is not dying. If anything, AI is making it stronger. YouTube is also quietly becoming a subscription powerhouse. Ad revenue on YouTube came in at $9.9 billion, up from $8.9 billion a year ago. But the bigger story is subscriptions. Google now has 350 million paid subscribers across YouTube Premium, YouTube TV, and Google One. That's a massive recurring revenue base that keeps growing every quarter. And just quickly, Waymo, Google's self-driving car company, hit 500,000 fully autonomous rides per week. That doubled in less than a year, and they're now operating in 11 major U.S. cities. It's still losing money, but it's growing incredibly fast. This is Google placing a very big bet on the future of transportation. So what's the takeaway here? Google came into 2026 with a lot of skeptics asking whether AI would hurt their core business. This quarter answered that question pretty clearly. AI is not hurting Google, it's turbocharging it. Cloud is booming, search is stronger than ever, subscriptions are growing, and they can't even build fast enough to keep up with demand. The stock jumped around 10% after these results. And honestly, given what we just went through, it's hard to argue with that reaction. If you found this helpful, hit subscribe to Yield Curve Trader. We break down earnings like this every quarter in plain English, no finance degree required. And if you're new here, welcome. This is exactly what we do. See you in the next one.